Okay, so this is a strategy which I'll be using for the next 3 months to forward test it, and I also recommend the strategy for any beginner who is just starting trading, because it's the simplest strategy and you can trade it on any time frame, from the daily time frame down to the 1 hour. So for this particular example, we are going to be doing it on BTC USD. We are using the daily time frame. So for this, you just need only two indicators: the volume indicator, which is already laid out here, but we add the volume moving average, the 20 volume moving average, and then we add the 50 exponential moving average on the chart. So this 50 exponential moving average we see is this yellow line. So for this strategy, we simply observe the price action. Whenever we have a strong rejection candlestick, a strong green candlestick moving out from the level, after we've gotten at least two candlesticks coming down, that is basically whenever we've had a drop and then we see some liquidity sweep on that candle and then we see a rally, basically that's a very good opportunity to enter. So let's play it out live so you can see. So this is the chart happening, this is how it moves. So what we're trying to see here is we're trying to see price above the EMA, and then we're trying to see a drop, then we're trying to see a candle rejection from that area and then closing above that area. So here we have it right here. So let's pause and let me show you exactly what I mean. So you can see here we have a candle here with a very high volume. So the volume, you can see the volume is above the volume moving average, so that ticks it off as a high volume candle. Secondly, we don't want to see indecisive candles like this. We want to see decisive or explosive candles. Then once we see this happening, we've met all our criteria to mark out the areas and area of interest. So we start marking out from the base, the opening of the candle, and we mark out to the lows of the previous week that formed the drop. So it's very important you see two red candles, two or more red candles, and then you see a green candle which has high volume. So once we notice this happened, and we note, then you wait for a candle closure, the candle to open and close above the level. So you can see here we have a candle closing, opening and closing above the level after the rejection. We don't want to go into choppy situations, so we want there to be a clear movement from that area. So simply, once we notice that, we place our entry here at the proximal line, and then we place our stop loss slightly below the distal line. So me, I like to be very robotic with this, so I like to say I place my stop loss 1.2 times the size of the distance between the proximal and distal line. So my stop loss here is $2,466 on Bitcoin, and that's because my proximal and distal line at about $2,400 away. So once we do this, we simply place our limit order, and then we wait for price to trigger us in. And here you see we had a trigger in, and then we just move. So it's actually a very efficient strategy, and it can be used on all time frames. So we just simply trail our stop loss with a swing lows and keep riding. So let's show another example so it's very clear. So this time we're going to go again, another example, just spotting up another example at random, and it's not just long, so let's look for a short example, and let's